You just spent months saving for a down payment, survived the mortgage paperwork, and finally made it to the closing table. Then, right before the keys are yours, one more bill appears: title insurance. It can cost $2,000, sometimes $3,000, and the weirdest part, you will probably never use it. Across America, this product can generate more than $20 billion in a big housing year. Health insurance companies spend roughly 80% of your premiums paying out claims. Title insurance companies, by comparison, often pay out only around 3 to 5%. So where is the rest of your money actually going? And more importantly, what are you really buying here? Protection, peace of mind, or access to a system where almost nobody is truly competing for your business? Before we call title insurance a total racket, we have to be fair about why it exists. Unlike car insurance or health insurance, title insurance is not really protecting you from something that might happen tomorrow. It protects you from something that may have already happened years ago, buried somewhere in the paperwork. Before you buy a house, a title company searches public records to make sure the seller actually owns the property and that nobody else has a legal claim on it. They are looking for hidden problems: unpaid property taxes, old liens, forged documents, recording mistakes, or even long-lost heirs who suddenly show up and say, "Actually, this house should have been mine." And this is where the paperwork gets a little annoying. The lender's policy protects the bank, the owner's policy protects you, and yes, you usually pay for both. Most of the time, nothing goes wrong. But when it does, it can get ugly fast. Take a homeowner named Loretta. She bought a house with what looked like a brand new roof. Months later, a contractor showed up demanding $15,000 because the previous owner had never paid the bill. That unpaid bill had turned into a mechanic's lien, a legal claim attached to the house itself. Without an owner's title policy, Loretta could have been forced to pay the debt herself or risk losing the home. So yes, title disasters are rare. But if one lands on your doorstep, it does not feel rare anymore. The real question is not whether title insurance has a purpose. It does. The real question is why buyers are paying thousands of dollars for a product that almost never pays out. And that answer takes us into the hidden referral network behind the closing table. If you want to buy a new smartphone, Apple and Samsung compete on price and features to win your business. But title insurance operates in a parallel universe where normal competition does not exist. Think about the last time you bought a house, or watched a family member buy one. Did you spend days shopping around for the best title insurance company? Did you check reviews on Yelp, or look for a discount code? Of course not. You just used whoever your real estate agent or your mortgage lender recommended. And that brings us to the core insight of this entire industry. Title insurers do not compete for you, the consumer. They compete for referrals. Since homebuyers usually sign whatever paperwork is put in front of them, title companies focus their energy on building relationships with real estate agents and loan officers. They sponsor educational seminars, host industry golf outings, and set up joint ventures called affiliated business arrangements. There is a federal law called RESPA that is supposed to ban outright bribes and kickbacks in real estate, but the industry has spent decades finding highly creative ways to keep this scratch each other's backs system alive. To make matters worse, in some states, like Texas, title insurance premiums are heavily regulated, which can limit how much companies compete on price. Since they can't lower their prices, and you aren't shopping around anyway, the rates stay sky high and your wallet takes the hit. But what if an entire state proved this whole system is completely unnecessary? If title insurance really had to cost this much, then every state should look basically the same. But one state quietly proves that is not true: Iowa. Back in 1947, Iowa banned private commercial title insurance entirely. Instead, the state runs its own public system called the Iowa Title Guaranty. And because that system does not have to feed a giant network of corporate referral deals, the cost is dramatically lower. While a buyer in California might pay $2,000 or more, an Iowan can pay a flat fee of around $175 for similar protection. According to the Iowa Bar, that public system has saved residents more than $1 billion over time. And somehow, houses in Iowa are not collapsing into legal chaos. That is the part the industry probably does not love talking about. Iowa suggests that buyers in many other states may not be paying only for risk. They may also be paying for the structure around the risk, the referrals, the middlemen, and the lack of real shopping pressure. But once homeowners are confused enough about title risk, another industry shows up to sell them fear all over again. You've probably seen the commercials. A serious voice warns that hackers can steal your deed online, take over your house, and leave you fighting to prove you still own it. That sounds terrifying. It also sounds like something that should require urgent protection. But services like Home Title Lock do not actually lock your title. They do not stop fraud before it happens. They are basically monitoring services. They alert you after suspicious activity appears in the records. That is useful in a limited way, but it is not the same as putting a deadbolt on your deed. It is more like paying someone to call you and say, "Hey, your car just got stolen." And this is the larger pattern. When homeowners do not understand the system, someone can always sell them peace of mind at a markup. So the question becomes, if title insurance is expensive, confusing, and wrapped in fear, what can you actually do before you sign? Maybe one day, cheaper legal opinions or better digital records will shrink this whole industry. Attorney opinion letters can sometimes cut the cost by letting a lawyer certify the title instead of forcing a full insurance premium. And maybe, someday, better digital land records will make the whole process cleaner. But none of that helps much if you are closing on a house next month. So here is what actually matters today. First, use your right to shop. When your lender gives you the loan estimate, look for the section called Services You Can Shop For. That section matters because you do not have to automatically use the title company your agent or lender recommends. Most buyers never question it. They are tired, overwhelmed, and just want the closing to go through. But spending even 30 minutes comparing local title companies can save you hundreds of dollars. In some cases, it can save $500 to $1,000. That is not pocket change. That is furniture money, moving money, a month of groceries. Second, ask for the magic phrase most buyers never say: do I qualify for a reissue rate? If the home was sold or refinanced within the last 5 to 10 years, the title company may not be starting from zero. A lot of the title work may have already been done. In many cases, that can mean a major discount, sometimes up to 40% off. But here is the catch: you may have to ask for it. And third, check the junk fees. Before closing, look carefully at your closing disclosure. Title companies may add little line items that sound official: courier fees, wire fees, document preparation fees, administrative fees. Some of them may be legitimate. Some of them may be padded. But either way, you are allowed to ask. What is this fee for? Can this be reduced or waived? $100 here and $100 there may not sound huge when you are buying a house, but that is exactly why these fees survive. Everyone is looking at the giant number, so the smaller charges slip through. The goal is not to become a title insurance expert overnight. The goal is to stop treating the closing table like a place where you are only allowed to sign. Because the moment you ask questions, compare options, and use the right phrases, you stop being the easiest customer in the room. Title insurance started as a necessary safeguard against rare, devastating risks. But over time, it evolved into a low-risk, high-profit machine, propped up by fear and friendly deals behind closed doors. Meanwhile, lawmakers and tech innovators are trying to find cheaper, smarter alternatives. But the $20 billion question remains. Can an industry built on fear ever willingly let itself go obsolete? What do you think? If you had the choice tomorrow, would you skip private title insurance to save a few $1,000s? Or is that peace of mind still worth every penny to you? Drop your thoughts in the comments below. I read all of them. And if this video helped you understand where your money actually goes, hit that like button, subscribe, and I'll see you in the next video.